Plenty of fears are rolling through the market and the economy, but our analyst believes a big rally is still coming yet this year. Joining us today is MarketBeat Analyst Thomas Hughes with a look at the exact date of that next market rally. Thomas, I'm excited to hear your take on why you believe the market will be rallying later on this year. And we're going to share at the very end of this video that exact date prediction of when you think the real rally is going to start. Before we get to that date, we're going to talk about 5 reasons why you believe the market is showing signs that rally is coming. We'll go through all 5 of those reasons, but I want to start with where we are right now, Thomas. How do you feel the market is doing right now leading into the fall?
There are certainly headwinds. The market's not moving up, strongly or sharply, but it is still rallying. We're currently consolidating near record highs. We're above what I consider to be a critical resistance or support level now. I think that the stage is set for this market to continue rallying through the year end. I think for the S&P 500, we're looking at easily moving up to the 85, 86, 8,700 range, possibly higher, just depending on how the next couple of weeks, couple of months unfold.
Well, before we look ahead to how things might unfold, let's look back to how the summer unfolded. And I think that we've already had a few discussions about how surprising that summer slump was this year.
Yeah. There was a slump, and some stocks certainly did pull back harder than others. A lot of tech and big tech and some AI names pulled back. But as far as the S&P 500 went, it really just moved sideways within a tight range. To me, this is a consolidation. Technically, it looks like a bull flag pattern, which is a very bullish pattern. Here at the end of the summer, we broke out to a new high. So to me, the technicals are very strong. We have a bullish pattern. We have a breakout to the upside. So to me, it's just a matter of time for this market to continue moving higher.
I want to address the fears before we get into the 5 reasons you believe the market is showing signs that it will rally later on this year. And of course, you're going to share that date with us too of when you think that rally is going to start. But let's talk about the fears a little bit, Thomas. There are some real fears out there. I see tons of headlines and lots of comments from our viewers every day who are saying, I've got money on the sidelines. It feels like this AI bubble is going to crash. The economy feels weak to me. It feels very shaky right now. What are your thoughts about some of those fears that are out there?
I think that the market is just maybe even just grasping for straws. I mean, there are certainly some headwinds and some risks. Some are greater than others, but the fundamental story is still in place. There are lots of drivers for the market. Earnings is the big one. With earnings growing, the market really has nowhere to go but higher. So within that scenario, those near-term headwinds kind of cloud the earnings outlook from time to time, raise fears, raise speculations. And then over the summer, which is kind of a quiet trading time anyway, it's just time for those fears to kind of grow and fester. And I think that's where we are right now. We're on the cusp of a change, and that plays into my reasons and why I think the market will continue to rally.
Why do you think those fears are out there right now?
I mean, they exist all the time. They never go away. It just depends on what is the market focusing on. And right now it's focusing on more of the fears. A lot of them center on Iran and the Iran war. There's lots of risk involved in that. But that situation, I mean, not to downplay it too much, it seems to be maturing past like hostilities to where economic sanctions are going to take into play. So I think that the risk actually is diminishing in that regard.
All right, well, let's get into your list of the 5 reasons why you believe the S&P 500 is going to rally later on this year. And then we'll get into that date of when you think that rally will start. What's the first reason you see pointing to a rally in the S&P 500 yet this year?
Well, first, it's seasonality. History shows us that the market tends to rise in Q4. September and October will be the shakiest months, probably trending sideways, some volatility. But moving forward from October into November and December, we're expecting to see pretty strong gains. Both of those months end higher in the 80 to 90% tile range. So we're pretty, we'll say guaranteed, but historically speaking, it's very likely for the market to continue rallying. And that just sets the basis for trading in general, not just for me, but for institutional investors and big money, smart money investors, and even everyday traders. We all read the same almanac. The almanac tells us all the same details, and that is that the market tends to rise in Q4. So when we come into Q4 trading, we tend to think, it's going to be bullish.
Yeah, what I heard there, Thomas, is actually expect some more volatility and expect some more downward action in the short term. I think, you do a video like this and people think, well, the market's going to rally. And as soon as it doesn't, they get upset. But I think what I'm hearing from you is that the market's not going to rally in the next couple of weeks. It might do the opposite.
Historically, we do see a lot of volatility in September and October. It's just the market getting back from the summer. All those sell in May traders are coming back and they're trying to decide what to do. But I would expect to see that as the fall progresses, that we see some pretty firm signals in the market pointing to higher share prices.
One other thing with seasonality before we move on to your next point, this year it's a different seasonality, and that is an election year. We have a midterm election year coming up in November. Does that play into your seasonality thoughts or that date that you're looking at for a rally either?
The market tends to rise in election years as well, usually signals that either the party that needs to be back in control gets in control, or the things that are happening that we like are still going to be happening. So I think in that regard, we're going to continue to see strength based on the election results.
Yeah, those opinions about how the elections impact the market vary widely. I'd love to hear your thoughts of what you think a midterm election year could mean for the market this year or in past years too. Let me know your thoughts on that impact in the comments. All right, Thomas, let's move on to that second reason that you are looking at for a potential market rally this year.
Well, one of the fears is the FOMC and the potential for higher interest rates and inflation. There is a fear that the Fed is going to hike rates by year's end, but I think that that's highly unlikely. There are lots of reasons to believe that they won't. Number one is that the U.S. just can't afford higher rates. We're already spiraling down into the deepest, darkest dungeons of our debt story, and if we raise interest rates, it's just going to accelerate that even further. Also, inflation's being underpinned by higher oil prices. The Fed can't do anything about higher oil prices. They can impair economic activity, but they don't want to do that to impact oil prices because they don't want to tip the economy into a recession. The economic data hasn't been pointing to a recession, but it also hasn't been super duper strong either. So in this regard, I think that the data gives the Fed pause. I think that they do not hike rates by year's end. Possibly not at all. I think that they stand pat, choosing to wait and see what happens with oil prices. I think that oil prices might remain elevated here in the near to midterm, but by next year they should fall pretty sharply. Not only is the Iran war, moving past the hostilities phase where we expect to start seeing, freer oil flow, but also the oil industry is working to get around the bottleneck of the Strait of Hormuz. They're not going to be able to bypass it completely, but production and capacity and the industry in general is working to refill that lost supply. So eventually we're going to have stockpiles rebuild and oil prices are going to come crashing back down.
Yeah, this is getting back to those major fears that you said a lot of people in the market have, and that's the Iran war and really the trickle-down impact. A lot of what you just discussed with what the Fed's going to do with rates, what is happening with inflation, what's happening with oil prices, all of that's interconnected. And that seems to me, one of the biggest area of fears that I'm seeing in the market. So everything you just talked about is where a lot of those fears originate from. But you are saying that this area is helping you feel that there is a rally coming. And that is a connection that I think is interesting. Why do all of these areas of fear give you confidence that there's still a rally coming later on this year?
Well, it's like not that the fears are giving me confidence, but the fears I think are overblown. I think that the market is overreading them and they're reading too much into it, and it's causing headwinds today, market weakness today. It's clouding the actual fundamental story, which is what's going to be driving the rally later on.
Okay, one other question here. I know we have a new Fed chair who is trying to change the way that they talk about what's going to happen in the market with interest rates and really not trying to give that preview of what's to expect, especially for those big banks who kind of rely on that. Do you think that could have any impact on what happens with the rally later this year? Is that change in the way the Fed communicates to the market?
The way the Fed communicates is changing. That's what Warsh is saying. I think what it does is it causes some angst because the market's going to want to know more than it does. But I think given time, the market will be just fine with it because it'll be one less thing for them to be worrying about. They're not going to be worrying about every little thing the Fed does or the possibility that rates are going to change. It's just going to make its plans. It's going to stick to its plans and do that until things actually do change. And in that regard, I see more stability and in that economic growth, employment, wages, cash flow, earnings for the S&P 500, and higher index share prices.
Okay, let's move on to that third reason that you were looking at as a sign that a rally could be coming later this year.
Well, that's the AI boom. I mean, it's still booming and it's about to boom again. NVIDIA's results are incredibly hot. It's still growing at a very robust pace. Demand for products is still there. And then you have to think that NVIDIA's growth is symbolic of an ecosystem of growth. Every dollar in GPUs is at least $2 in adjacent technology, not counting the actual physical data centers and the power to operate them and the construction companies. So there's a lot going on under the surface with NVIDIA's results, where a strong report from NVIDIA really affirms a broadening market rally that extends all the way to companies like Caterpillar. Caterpillar's seeing tons of demand for product because people are building data centers. This is not going to end for the foreseeable future. I think it's only going to accelerate because within the AI data center boom, it's going to boom again because Advanced Micro Devices is in the process of delivering its first Helios racks. That's going to ramp over the next few quarters, really unleash the availability of GPUs and the inference boom. The inference infrastructure industry is expected to be more than double the model training industry, which is what we've been watching so far. So in this regard, I think the market is really disconnected from reality because what I'm reading in this information is that the AI boom is going to not just keep booming, but it's going to like boom bigger and longer and stronger than it has been. And that's, to me, is a driver for the stock market, for the index, and for index prices.
Yeah, the AI boom is one of those areas of fear that so many people have in the market, and that's whether this massive bubble is going to burst. And you mentioned one stock that's so interesting you brought it up, and that's Caterpillar, because we have the famous shorter Michael Burry recently just shorted Caterpillar. What do you make of that, Thomas, to see people starting to essentially bet against the AI bubble continuing to grow? It seems as though there are some major investors out there who are betting on that bubble to burst soon.
I mean, it gives me a small amount of pause to think, what is it that I'm not seeing? But then I'm also like, seems crazy. I can't make that move based on what I'm seeing in the data. It seems completely contrary to the reality. And you think there's risk in the outlook, but think about what NVIDIA did by securitizing its GPUs. It de-risked the outlook. It de-risked its own balance sheet. It provided funding. It secured the pipeline. And what's not to say that AMD won't see the same benefit? I mean, NVIDIA's market's probably going to see more securitization now that we've seen that it works to begin with. AMD's market's going to follow that, and it's just going to continue de-risking that pipeline, continue entrenching AI and data centers as needed infrastructure.
Yeah, that funding part that you talked about is what is really interesting here as some of those fears that I hear about. Again, you're talking about being bullish and I'm just bringing in some of the fears that I've heard
Yeah,
from
I
some
mean,
of our viewers and having you address them. I think it's a good way to go about doing this. But talking about some of those fears of the funding is people have called this kind of monopoly money. The whole AI build out is all happening on heavily financed money, that there's huge interest rates and huge investments going into this. When are we going to see the income coming into this AI story? Is AI actually going to be profitable? Have they figured out a way to monetize all of the compute power and things like that to support the massive influx of spending to build this infrastructure? What's your take on that fear?
the companies are starting to show the proof that they can monetize, and that's in the software and the application companies. Right now, the infrastructure, the hardware companies are making lots of money because people are buying the product to build the data centers. As far as when the really big boom of AI and the inference money starts happening, that's going to be later on in next year and in 2028 as all these data centers are built. I've talked about this before. A lot of the data center spending we're talking about hasn't happened yet. They're being built now, they're being built next year. They're waiting for next generation products to be made and delivered. So a lot of this is in the future, and all of it requires upfront spending. So, and that's one of the hurdles and one of the fears. All this upfront spending, and then down the road, profits and revenue. But the securitization angle proves that the market does see past the spending phase to the monetization phase. Otherwise, those big money lenders would not be interested in putting up their capital.
Yeah, I really do see a lot of that actual money going to the companies building that AI infrastructure right now. We've seen that time and time again show up in their earnings reports where there's real money flowing into the companies that are doing all of this building right now. If you want to look at a list of some of those specific names, I know we're not covering a lot of specific stock tickers in this video. Make sure to check out this special report. If you haven't done it yet, this report is normally $30 on MarketBeat, but it's free just for our YouTube viewers. You can scan the QR code or click the link in the description to get that free report on the 10 best AI infrastructure stocks to buy right now. These are the backbone of the AI economy, and they have real money flowing into them right now. And that build out is far from over. That money is going to continue to flow into these infrastructure builders over the next 12 to 18 months for sure. So scan the QR code, click the link, and get that full stock list with specific stock tickers today. Okay, Thomas, let's move on to that fourth reason that you are looking at as a sign the market could be rallying later on this year.
Market breadth. I saw many headlines over the summer concerned about market breadth and saying how signs of weakening breadth was signaling a deterioration in the market. And I just don't see that. The breadth indicators that I watch usually, they did show a small amount of weakening over the summer, but then they just kind of trended sideways. They don't show like really robust bullish conditions right now, but neither do they give any hints of a market top or a reversal of what I would expect to see. Plays into the whole seasonality issue. As traders are coming back into the market in September and October, that breadth will improve over time, and that will underpin the rally moving forward.
All right, back to basics for a minute. When you say market breadth, what does that mean exactly?
So there was concern before because Nvidia was the driving force of the market. It was doing almost all the heavy lifting for the S&P 500. So in that regard, breadth was kind of narrow, but breadth has expanded over the last year to include more stocks and more sectors. We see that in the indices. All the indices are trending higher, trending at fresh all-time highs or near there right now. And so with the breadth indicator, what we're seeing is just more stocks are advancing than declining. More stocks are hitting new highs than hitting new lows. As the quarter progresses, I expect to see those numbers improve to where most stocks are advancing and most stocks are hitting new highs, and that will really drive an explosive rally in the S&P 500.
Yeah, spreading that growth out among many different companies. And we are seeing that, just like I talked about in that infrastructure report, there are lots of names that are benefiting and growing right now. But will that apply to all sectors? We're seeing growth in a lot of different stocks, but are those concentrated still in mainly supporting that AI growth story, or is it spread out a little bit more market wide in many different sectors?
It is spread out more market wide. There are some sectors that are lagging with like low single digit growth projections, but all sectors are projected to grow over the next year. The heavy lifting will be done by tech, but also energy. Energy is doing real well with higher oil prices. We've got higher margins for them, so they're doing a lot of the driving force as well. But again, industrial stocks, material stocks, consumer names, services names, there is strength throughout the index.
All right, let's get on to that final sign that you are looking at for a potential market rally later this year. And we are just a couple of minutes away from you sharing that exact date of when you believe the market is really going to start rallying later this year. But first, what is that fifth reason, Thomas?
I've hinted at it already, and that's earnings. Earnings growth drives the market higher. When earnings are growing, the market is growing. Right now, we've got a triple tailwind in place in which the earnings are growing. There's a forecast for acceleration, and the estimates have been rising. Actually, a quadruple tailwind because we've also got outperformance. The outperformance over the last few quarters has been so ridiculously enormous, accelerating in the past quarter, that it just shows a clear market disconnection between what's actually happening and what the market thinks is happening. And right now, what's happening is earnings grew by 50% in the last quarter. The upcoming quarter is looking at double-digit growth again, but also these estimates are far too low compared to the trends. I'm expecting another solid quarter with outperformance in the 20 to 30% range, possibly higher. But driving the market higher over time, and that's the driving force. I think that not only will we see outperformance, but also we'll see guidance reaffirmed or strengthened, pointing to a strong start or pointing to a strong finish to the year, but also for strength continuing into the next year, which is what's going to be really important for the rally to be sustained. If the market thinks that growth is going to top out at the end of the year, the market will top out before the end of the year. But if we think that next year is going to be strong again, the market could keep rallying right into the first part of next year.
Now, those strong earnings are another key point of fear that I hear from a lot of viewers out there. And that's that so many of these stocks right now have already priced in that forward-looking growth. We all know the market is forward-looking. We're looking at how much growth could be coming. But so many people believe that growth is already priced in, that these stocks are priced to perfection, as we often talk about. Whenever we see a strong earnings earnings report and the stock still tumbles, it's because people were expecting even greater
Yeah.
outperformance. They were expecting even more from that stock. Do you think there's a little bit of that story starting to creep up too often across too many different stocks, that even though they have that really strong report, that really strong growth that you just mentioned, it's not enough because the stocks are already flying too high for where they maybe should be when it comes to responsible price to earnings ratio, that sort of thing?
I think the market is confused about a lot of these tech companies because they're all being viewed in a rear-looking lens versus their legacy business. And this is no longer a legacy business. This is now AI business. AI has changed technology globally. Everything is changing. Starting with the data centers, this is going to extend from data centers all the way through to the device in your pocket, which will be one of the last things to get upgraded. So this cycle has legs. It's going to last for a long, long time. And as far as the valuations, these companies are trading at high valuations relative to past earnings, but you look at the forward outlook that they're clearly growing into, the signs all point to this thing happening. They're trading at pennies on the dollar. NVIDIA is looking at a 400 or 500% gain over the next 10 years based on its forward outlook because its forward P&E, the last time I checked, was in like the low single digit range. That's insanely low. This stock usually trades about 30, 35 times its current year earnings. So you got to think that in this scenario, NVIDIA could rise. So we're looking at 5x versus 2036. It's 2026. So in the next 10 years, we're looking at basically a 600% increase in NVIDIA's stock price based on its earnings power.
That's a huge increase with a lot of legs left to run in this rally for AI. So for you, I am not hearing any kind of bubble fears, although I know there are plenty of investors out there who are very, very fearful of where this AI story could go and when that bubble is going to burst at some point. Before we get to that exact date, one more question on that AI rally. Do you think there is a time in the future when this AI bubble does burst somewhat, where there will be some losers and and only the winners will last from this AI growth story that we are in right now very much?
There could be some bursting, but it won't come until we see an end to the data center build out. Right now, they're still building them. I mean, it's this, and it's just still happening. And I think that story is going to accelerate. I think that within AI, there are many bubbles. And some will pop and some will reform. This is a bubbly, frothy market that I think is growing. But that said, I don't think that it's going to be like a traditional bubble where all of a sudden the market goes away.
You have laid out very well all of the reasons that you are looking at and all the signs you are looking at that point to a rally happening yet later on this year. Now let's get to that exact date. When do you think this market rally will begin?
Well, I call it mid-October, and I'll say October the 13th specifically. That's because of JP Morgan. JP Morgan isn't so much of a trigger by itself, but it marks the beginning of the Q3 earnings reporting season. The Q3 season will affirm or refute all the things that I've said. I assume that it's going to show strong results. If it does, that'll be a catalyst. The market will rally from that point forward. And if not, then we'll see the market start topping out.
Well, let's talk about that rally in October. We've got elections coming just a few weeks after that earnings season begins. Could there be some wavering around the election, some short-term volatility around that election timeframe, or will that be just a minimal blip that will kind of lead into this year-end rally based on what happens in earnings?
I think the election will be more of a blip. I think once we get JP Morgan reporting, it'll be 2 or 3 or 4 weeks for the season to gain momentum. That overlaps the election day. So within that, I see the market gaining momentum within that time period, experiencing some volatility, possibly driven by the election results, but also gaining momentum as these results come in and the market affirms the outlook for AI spending.
One specific question we had from investors who are watching and know that the market tends to bottom out in that September-October timeframe are wondering how much cash should they have on hand? When should they start buying? When do you want to get in before that rally happens if you believe that the market is going to rally into the year end?
Well, you're going to want to, pick your stocks and watch for entry points. Look at your technical levels for support and resistance and use those as your triggers.
A really great conversation today, Thomas. Thank you for diving into your expectations. And I know, Thomas, this isn't the first time you've given that bullish outlook on where you think the market is going to end the year. At the very beginning of 2026, you gave some market predictions. To see how well those have panned out, here is that full video you can watch of what Thomas had to say back in the new year about where he expected the year end to go. Watch that full interview here.